Are you thinking about buying an existing business or a franchise, but you aren't sure how to finance it? Well, you're in the right place. Today, we're going to explore some of the best financing options available, including SBA loans. Let's get started. Hi, my name's Trent Lee. I've sold over 600 businesses, and for the last 5 years in a row, I've been named the #1 business broker in the country for the most closed transactions. And I make these videos so that one day, when you're ready to buy or sell a business, you'll reach out to me to have me help you through the process. First off, you might consider traditional loans from the bank, maybe bringing on investors, negotiating seller financing, or even borrowing from friends and family. But there's one option that stands out for many business buyers: SBA guaranteed loans. SBA loans are fantastic because they come with low interest rates. Typically, right now they're high, but traditionally they've been quite low. They have flexible repayment terms and a modest down payment requirement. This is possible because the Small Business Administration backs these loans, reducing the risk for the lenders. Many savvy sellers, if they're working with a good business broker, get their business pre-approved for an SBA loan to attract buyers just like you. But getting an SBA loan isn't a walk in the park. After all, we're dealing with the government here. It's going to be a lot of paperwork. You'll also need to meet certain eligibility requirements. Let's talk about some of these requirements. First up, the down payment. You generally need at least a 10% down payment for most loans. Most SBA lenders don't like to go below $250,000. Some will, but most are going to be north of that. Importantly, this shouldn't deplete all of your cash. You need to have some money for a rainy day fund. So if you're just barely scraping by to get the 10%, that might disqualify you from an SBA loan, at least on that size of a transaction. Now, on the side note, if you're structuring the deal right and you're working with a good business broker, you can structure this for as little as 2.5% down with the SBA. That's a whole separate video, different topic. But just generally, plan on having at least 10% down. Just because you can structure the money for a lower down payment doesn't mean you don't need the money to begin with. There's a big difference between buying a business with little money down and having little money to begin with. When structuring your loan, lenders can also include some working capital to help you cover closing costs and ensure a smooth transition over to new ownership, and that bridge between that first 30 to 60 to 90 days when you might be taking over a business before the cash flow starts to come in. Let's look at a scenario. Say you're buying a business priced at $600,000. That means you need to plan on around $60,000 and then secure a loan for the rest. A strong business should have consistent cash flow and be able to prove its ability to service the debt. Plus, if you have experience in that industry and good credit, that's a big factor for the SBA. But life isn't always perfect, right? Maybe you've had some medical bills or a rough divorce. Lenders understand and can work with issues like these, sometimes even adding extra cost or extra working capital to the loan to ensure that you start off on the right foot. For smaller deals under $350,000, expect a higher down payment, possibly 15 to 20%. Let's say you're looking at a business that costs $250,000. You'd need $50,000 down. Again, ensuring you have some cash after the purchase to go through and find a lender who would be interested in financing that type of transaction. Remember, the business's cash flow should support all the expenses, including your loan payment. So a good business broker should already outline the debt service ratio to finance and how you can finance it and be within the SBA standards. If you don't have experience or have a related transferable skill to that type of business, you're going to have a challenge convincing the lender, why are you a good fit to buy this business if you don't have any experience or any transferable skills into that industry? So keep that in mind. Finding a business at the right price and within the right industry is key. Before we wrap up, remember your personal credit and background play a big role too. Always be upfront about any potential issues with your lender. They're usually there to work with you and find a way to make the transaction work if it's possible. For more information about SBA loans and going into more detail about financing strategies, check out my other video on how to finance transactions with the SBA for as little as 2.5% down. That will help walk you through what you need to do to buy a business with a low down payment. Just know, as I mentioned before, not putting a lot of money up is different than not having a lot of money to begin with. We have to structure the transaction right and make all the components work, but it's definitely possible if you're working with a savvy business broker, a flexible seller, and the right lender. I'd be happy to walk you through that process on any business you're looking at buying. Thanks, and look forward to working with you.